Okay, let's have a look at some basic Fibonacci convergence examples. Well, Fibonacci combined with other tools, of course. Just we see here we have this uptrend, and market is making higher highs and higher lows. And on this upswing here, price retraces. We have a previous level of resistance that becomes support. We have some sort of indicator, maybe support resistance momentum moving average indicator that comes through here, also converging at the same point. As well, we have an uptrend line, and they all converge here at this star, and price bounces. Amazing. Price bounces here and continues to make higher highs. And these are the type of areas that we're looking for to make trades. Looking at a chart now, we see on this up price swing, we see a rally. Price retraces 38, 50, 62, 79, and the 79% retracement converges with the 10-day moving average, which is a kind of a natural moving 10-day based or two-week based support and resistance level, and we see here a convergence and a nice bounce. Looking at some patterns, some sequential patterns here. We see this is an Australian dollar 2-hour chart, so it's quite a long time frame, and you see this dotted line here. We see this price swing rally to this high, and if we pull our Fibonacci's from this low to this high, price retraces 62%, bounces, consolidates, and then makes its up move, pausing at the high and the 127% extension. We consolidate. Now if we move from this low to this high, so the bounce low here, from the bounce low to the most recent high, price retraces 62%, okay, 38, 50, 62%, as well as the 10-day moving average, and then price rallies and moves above the high, trades and holds above the resistance, becomes support, and extends to the 127% extension. On the next swing, from this low to this high, price retraces 38, 50, 62%, 10-day moving average, and then moves into a rally scenario. Now we're looking at an Australian dollar 4-hour chart, and the 4-hour charts really lend to good long-term, well, medium-term position trades that could carry forward for several days or a couple of weeks or more. But naturally, you want to go down to your smaller time frames to refine your entry, and also you must be willing, your stops are probably going to be bigger unless you have a real good entry in a smaller time frame. Stops could be bigger, but you also may have to wait through several trading sessions before your trade comes to fruition. We start at this low, price rallies to a high, retraces to 62%, consolidates and rallies, retraces to 62%, and trend line and 10-day moving average, and rallies to 127% extension. Looking at a downtrend now, price falls, and on this low here, on this high here, when we take our price swing from this high to this low, price retraces. You see this level of support aligns itself with 38% retracement, aligns itself with the central pivot of the following day, and We double top, we form a hammer, and then we fall to 127% extension, and then beyond the 162% extension. This is a very important level where price could bounce, and you want to trade it as close to that level as possible. Support resistance, 38% retracement, 10-day moving average is a bit above, but the central pivot of the following day as well. A Euro 60-minute chart we see now, and a spike low, failure to make a new low. Price rallies, retraces to 38%. Previous resistance becomes support. This is also a central pivot. Price rallies, retraces 62%, 10-day moving average, and rallies. Doesn't get through the high, but does in the following trading session. Rallies to 127 and 162% extension. Looking at this downtrend, price moves down, retraces to 38%, and support becomes resistance.